Hello students, hope you all are doing great. I'm Achal Chaudhary working as an assistant professor, BBA department in St. Andrews Institute of Technology and Management. So students, I'm back with my online lecture series of company accounts. So students, it's your lecture number 2 from unit 2. In previous lecture, we have started a new topic that is debentures. And in previous lecture, we have covered debentures, its kinds of debentures and issue of debentures. Today we are going to start with the meaning of bond and charge, redemption of debentures, methods of redemption of debentures, and your underwriting. So let's get started. Let's start with the understanding of bond. A bond could be a formal debt instrument issued by a corporation or government and purchased by investors. This is the meaning when we say that a public utility issued or sold bonds to help finance a new power plant. Investors talk about investing in stocks and bonds. So basically, one thing that is clear from this definition is that it is issued by the corporation and government. So a bond is an agreement between an investor and the company or government agency that issues the bond. When investor buy a bond, they are loaning money to the insurer in exchange for interest and the return of principal at maturity. So likewise, whenever we are issuing the debentures, it's kind of a loan instrument only, but it is issued by the companies or you can say government companies and at the fixed rate of interest. A bondholder is issued a fixed rate of interest against the bond. So this is your bond. Next term is charge. The company may borrow monies by providing security of its assets and may create a lien on the properties of the company, right? So the company may also issue debentures to raise funds which may carry a right interest in the assets properties of the company. So a charge is a way of security to the creditor or lender of his right on the properties of the company for the amounts due to him by the company. Basically, you can say charge is an amount of money that you have to pay for something. It's a amount which you have to pay after a certain time period. Kinds of charges. Basically, there are two types of charges, that is fixed charge and floating charge. So fixed charge, a charge which is identifiable with specific and clear assets at the time of creation of charges. It has been already decided like which will be the asset or property that will be involved and what will be the time period. So the company can't transfer such identified and defined property unless the charge holder or you can say the creditor is paid off his duty. So this is your fixed charge. And next is floating charge. It covers the floating and circulating nature of properties of a company like sundry debtors, stock in trade, etc. So the nature of the property charged may change from time to time. So it can be a like different property. It will be changed by time to times. There is nothing like fixed in this change, in this kind of charge. So basically, the only difference between fixed and floating charges, in fixed charge, whatever the property or asset has been given to the against the bonds or against any kind of security, debenture security, so that will remain against those particular holder only in fixed charge. And whenever there is nothing has been specified, no you can say asset or property has been identified against some basic debentures, so that will be your floating charge. Next is redemption of debentures. Basically, it refers to the repayment of these debentures by the company to the debenture holder. Whenever you are paying back the amount of debenture after a certain fixed time or some specified time, then it is known as the redemption of debentures. Whenever you are paying back the amount of debenture, so the company will discharge its liability and remove it from the balance sheet. Because once you are repaying the amount of debenture, once you have repaid all the amount, then you are not liable for any kind of liability. आपकी liability तभी खत्म हो जाती है when you are repaying the amount of debentures. So it will also have an impact on the balance sheet. Now you will not need not to record the debentures in your balance sheet. Methods of redemption of debenture. So first method is redemption of debentures out of profits. Whenever you are redeeming the amount of debenture out of the certain profits, that is your covered under your first head. Redemption of debenture out of profit implies that an amount equal to the face value of the debentures redeemed is transferred to DRR, that is your debenture redemption reserve. Thus, a part of the profits of company are withheld from the distribution of debenture holders. So, the journal entry in this case will be debentures account debit to debenture holders account. In second will be debenture holder account debit to bank account. Profit and loss appropriation account debit to DRR account. So these will be the three journal entries which will be covered under your first method. Next method is redemption of debentures out of capital. So under this method, the company may dispose of some fixed assets and may use the sale proceeds for redemption of debentures. However, it is a very unusual source of finance and is rarely followed because the company would not like to sell their assets, or their you can say they don't want to go for the sale proceeds, to use their sale proceeds to redeem their debentures. So it's a very unusual or rare case. So again, the company may utilize its working capital to redeem the debentures. So in this case, the journal entry will be debenture account debit to debenture holders account, debenture holder account debit to bank account. Third method is redemption of debenture by draw of lots, or you can say annual drawings. So under this method, the company redeem debentures each year. Annually, they are redeeming the debentures. The debenture to be redeemed are selected by draw of lots. Accounting entries of redemption of debentures are same as which we have passed in the case of debentures are redeemed out of profits. Debenture account debit to debenture holder account, debenture holder account debit to bank account, profit and loss appropriation account debit to DRR account. So students, just have a look on these journal entries. You will be like very clear about these journal entries, how to post these journal entries once you are solving the numerical portion. So just have a look. Don't be panic कि मैम नहीं समझ में आ रहा है. So it's a, don't worry. It's a very common. Just have a look on these journal entries. I'm just sharing the theory portion with you. Next is redemption of debentures by purchasing them in the open market. So sometimes the company purchases the debentures in the open market as its convenience and redeems them. The company may purchase the debentures at par, premium or discount. So the journal entry will be in this case will be debenture account debit to bank account. Next, redemption of debentures by conversion. Sometimes a company redeems debenture by converting them into a new class of shares or debentures. Whenever a person is, or whenever a company is redeeming the debentures by converting them into new class of shares or debentures. So if new debentures are issued in place of old debentures, the accounting entry will be debenture account debit to debentures account, which is your new debentures. And last is redemption of debentures after a fixed period. Under this method, the company redeems all the debentures in lump sum after expiry of fixed period which agreed upon in the prospectus issued at the time of issue of debentures. So the journal entry will be in this case profit and loss appropriation account debit to DRF account, sorry, debentures account debit to bank account. In third entry will be debentures account debit, premium on redemption of debentures account debit to bank account. So these were the journal entries which are covered in all the methods. So I hope you are clear with the journal entries at least. And last topic of the day is underwriting. Underwriting refers to the function of an underwriter. An underwriter may be an individual, firm, or a joint stock company performing the underwriting function. Underwriting may be defined as a contract entered into by the company with persons or institutions called as underwriters who undertake to take up the whole or portion of such of the offered share or debentures as may not be subscribed by the public. Such agreements are called underwriting agreement. So basically in layman language, if we talk about the underwriter, it's a kind of a contract between two parties. One is your company and the other one will be your underwriter. So where they agrees upon to sell up the or to like underwriter takes up the whole or you can say portion of the shares and debentures and he agrees to sell those debentures or to issue those shares and debentures to the public when the public is not you can say they are not issuing shares and debentures of a particular organization. So basically underwriting acts as a sort of insurance or guarantee against the danger of not receiving minimum subscription. It helps in to provide the minimum subscription to the organization by coming into the contract and by helping the organization for to subscribe the minimum number of shares and number of debentures. When shares or debentures are sold through underwriters, there arise more confidence among the public because whenever the underwriter takes or the liability or takes it enters into a contract between the organization, so this is because underwriter undertakes the shares or debenture of only those company which are sound concerns and whose future is bright. Then only the underwriter will came into the contract. And also underwriting creates an impression regarding sound status of the company. It increases the goodwill of the company somehow because it is ensuring the minimum subscription and it is also ensuring the subscription overall subscription of shares and debentures. Types of underwriting. Complete underwriting. In case the entire issue of shares or debentures of a company is undertaken, it is said to be full or you can say complete underwriting. Such an underwriting may be done by one underwriter or by a number of underwriters. In the full issue of underwritten by one underwriter, then his liability will be equal to the number of shares or debentures underwritten minus shares applied for. Basically, in underwriting, complete underwriting, your company's all shares and debentures are underwritten by the number of underwriters or a particularly one underwriter only. Next is partial underwriting. If a part of the issue of shares or debentures of a company is underwritten, then it is said to be a partial underwriting. Such an underwriting may be done by one underwriter or by a number of underwriters. In case of partial underwriting, the company is treated as underwriter for the remaining part of the issue. Suppose a company is having 1000 shares. Company have to issue the 1000 shares. So 40% shares has been underwritten by the some underwriter and the 60% was remaining with the organization itself. So it's a case of partial underwriting. Next is firm underwriting. It is an underwriting agreement where the underwriter or underwriters agree to buy a certain number of shares or debentures irrespective of the number of shares or debentures subscribed by the public. So all over the shares and debentures are underwritten by the underwriters, and if in case they fails to issue those shares or debentures to the public, then in that case the underwriter itself buys all the shares and debentures of the organization. Next is sub underwriting. An underwriter may itself enter into a sub-agreement with other person. Whenever a underwriter is coming into a contract with the other, or you can say sub-agreement with other person, then it is known as sub-underwriting, where he transfers a part of his underwriting risk. Whenever underwriter feels that he can't bear the risk by himself only, so he goes for the sub agreement to eliminate that risk, to reduce that risk. This is your sub underwriting. So students, that's it for today's lecture. In next lecture, we will start numerical portion from debentures, issue of debentures and redemption. So here are the questions based on today's lecture. Who is underwriter? What do you mean by debentures redemption fund? So try to solve both of these two questions, and still if you face any doubt, if you face any difficulty in any topic, then do let me know. I will clear all your doubts. Thank you so much for your time. Stay tuned for more videos.